How central banks work. Interest rates change. Inflation rises or falls. Banks borrow money. Currencies fluctuate. And somewhere behind much of this activity is a central bank making decisions that affect entire economies. Central banks are some of the most powerful financial institutions in the world, even though most people rarely think about them directly. So today we are going to walk through how central banks actually work and how they influence money, inflation, and financial stability. Chapter 1. The basic idea. Central banks manage national monetary systems. They influence interest rates and money supply. Financial stability is a major responsibility. Chapter 2. National currency management. Central banks oversee national currencies. They help regulate monetary systems. Currency confidence becomes important. Chapter 3. Interest rates. Central banks adjust benchmark interest rates. Borrowing costs change across economies. Spending and investment are affected. Chapter 4. Inflation management. Inflation is monitored constantly. Central banks attempt to maintain price stability. Economic balance becomes a priority. Chapter 5. Commercial bank relationships. Commercial banks interact with central banks regularly. Reserves and lending systems are coordinated. Liquidity management becomes essential. Chapter 6. Money supply. Central banks influence money circulation. Policy tools affect financial activity. Economic conditions guide decisions. Chapter 7. Open market operations. Central banks buy and sell government securities. These operations affect financial markets. Liquidity changes throughout the system. Chapter 8. Financial crisis response. Central banks may intervene during crises. Emergency lending stabilizes markets sometimes. Confidence becomes critical during instability. Chapter 9. Currency value and exchange rates. Interest rates affect currencies globally. International markets react quickly. Exchange rates fluctuate continuously. Chapter 10. Independence and politics. Many central banks operate independently. Political influence remains a debated topic. Economic decisions can have massive consequences. Chapter 11. Digital currency and future systems. Central banks are studying digital currencies. Financial systems continue evolving technologically. Future monetary systems may change significantly. Chapter 12. The bigger picture. Central banks shape modern economies. They influence inflation and financial stability. Global markets respond closely to their decisions. To wrap up, central banks work by managing monetary policy, influencing interest rates, and supporting financial system stability. They monitor inflation, oversee money supply, and respond to economic crises when necessary. Their decisions affect borrowing, spending, investment, and currency values globally. They remain some of the most influential institutions in modern economies. This has been a mini Leviathan production. If you enjoyed it, check out our other videos. See you in the next one.